It's 5 o'clock.
What's
It's
going
five
on,
o'clock.
everybody? It was 5 o'clock somewhere. It's five
It's five
o'clock
o'clock
somewhere.
somewhere.
5 o'clock
Omid knows
somewhere.
it's 5 o'clock.
Omid, how you doing, friend?
Yeah, it's five.
Well, it's 7 o'clock in my life. 7 o'clock. It's 8, says Liz. Right? So good to see you all. Welcome to our open office hour / happy hour. I went this evening with a Tom Dew 10-year. That's my pour this evening. Just
Ooh,
for what it's
ooh,
worth. So
ooh. I've got Lalo, one of my new favorite tequilas.
Lalo. That's a new favorite tequila. What's so
I'll tell
special
you
about
what.
Lalo?
I don't know. I just like it. I first had it when I visited Texas 2 times in 1 month, Dallas almost, and everybody there seemed to be up on it. So I was like, I
Okay.
need to be up on it.
All right.
Now suddenly it's everywhere.
Lalo was the way to go. So awesome.
So
Why don't you go ahead and stop share so we can just be normal sized on the screen?
oh yeah, that's true. That's
There we
true.
go.
Normal sized. You're waiting
All
on
right.
your bartender, Liz. Great, Chuck. It's nice to have you. I don't
Yeah,
get
man.
to. This is awesome. The group doesn't get Chuck and Corey at the same time very
I know we
often.
don't. I'm gonna try to do better and try to come in here a little bit more frequently. My baseball schedule for the spring season doesn't have me coaching on Thursday nights, so I can be in a little bit more frequently now that I don't have Thursday night trainings.
Dude, that's fun. That's fun. I
Yeah,
mean, I'm sure you love the baseball thing also, but it's also fun. I've got band rehearsal going on 2 rooms over. Hopefully, you guys can't hear it.
that's
But
awesome.
yeah, I got a band rehearsal going on. My son Cash leaves for tour for 10 days on Saturday.
Oh,
So,
okay.
oh yeah. So they're rehearsing.
10-day tour. You going to Florida, right?
He is not. He's going from
Oh,
Boston down into New York and like all that stuff.
got it.
Yeah. This trip is not Florida.
Got it. So let's
So,
talk about so the markets today took a little bit of a dump today.
yeah, a little bit.
You
What was
know,
that all about?
we're having a hard time. I think that 7,000 number is just being difficult. The market is having a really hard time getting through there. And when you read as to kind of why it's happening, the Cisco drop today was big, right? Cisco dropped 12% today. There was weak guidance going forward because of higher costs, and we're seeing that's kind of rampant through all the AI industry. Is higher cost of doing business is lowering the guidance for some of these companies, and that higher cost, which is lowering the guidance, is putting a little bit of nervousness into people. And so Cisco down 12%. I think AppLovin was down about 20%. I think
Wow, I didn't
Apple at
see that
one
one.
point was down about 8%. Like, yeah, they took it on the chin today a little bit, and there was a fair amount of weakness in the tech sector, and the tech sector was really the one that let us down today.
Chuck,
Yeah,
I
the
have a
one thing.
couple of questions.
Yeah.
So, to what extent was Cisco ever a big player? I mean, it was never one of the big
I don't know
seven.
that it has to be that big of a player. I think what it is I think it's a sign of potentially systemic weakness in that whole space, right?
Well,
You're right. Cisco's not a big player there, but it was big enough to move the markets today.
yes, but then look what happened after hours with Applied Material, and look what happened with Arista Networks.
Yeah, well, and AMAT's up what to it went from
9,
330 to 370. It's up huge, right? It's up like 12%.
right?
Um, but the Nasdaq itself, the futures markets of the Nasdaq haven't really reflected that either.
Well, I'd agree with that, but then my next question would be, what percentage of the Nasdaq would Cisco be?
Yeah, I don't
So,
Probably
think it's a
tiny,
very big
right?
one.
I would have to
right,
imagine pretty tiny.
exactly. So I just think it was a bigger concern about who knows what.
Right. Well, I mean, there was unemployment, right? Unemployment dipped a little bit, and so that certainly didn't help the market either. So you
Can you
have
explain that to me, Chuck? Chuck, I'm
yeah.
gonna ask you to explain something for me.
I
How
will say
does
you've got some splaining to do.
Yeah, and I don't really care so much about result of any economic reports, as long, I mean, for the most part I don't, but I mean, I obviously want to know when they come out to expect volatility. But how do you go employment change up double expectations but unemployment claims down? How does that work?
Well,
I mean, you had non-farm employment change up 130,000 when they expected, or the forecast was 66,000. Then you get the unemployment rate better than expected, but unemployment claims worse than expected. How's all that work? Do you have any insight on that?
I don't. I really don't. And
that sounds contradictory.
Well, it does. But remember, unemployment claims, there could be people falling off the unemployment rolls too. Right?
Is it private versus public sector?
Yeah. You could also have people falling. Remember, unemployment is based upon who's collecting and receiving unemployment. They fall off the unemployment rolls after a period. And I'm not smart enough to know that. I just know that the market didn't like it today. That's for sure.
Well, there's a couple of things that I think were going on. A lot of the employment is in one sector, healthcare.
Right.
Secondly, services. Everything else was down. And I think the employment figures also, if they're good, they point to no interest rate deductions. And I think that's a big issue.
Yeah. Do we think there's manipulation there?
I'm not sure about that. I wouldn't be surprised.
Because we started out positive this morning. Am I wrong?
I don't know that it's manipulation. I do agree though with Tex's point that those interest rates make a humongous difference, right? That those interest rates make a big difference. And when we see, the even the thought that we're not going to cut interest rates, the market is going to be scared away in that instance. Because, I don't have the Fed rate watch tool up at the moment. And I'm not sure how familiar everybody is with the Fed rate watch tool. But if you're not familiar with the Fed rate watch tool, get familiar with it.
Share it. It's got a 92% chance of no change right now, but that was 80-something% no change.
Yeah, let me
just
share
2
my
days
screen.
ago. Just 2 days ago, that was like an 80. That was in the 80%-ish range.
Yeah, let me share my screen.
With like a 19% change.
And if you want to find this, you can just Google Fed rate watch tool. And when you go to the Fed rate watch tool, what this shows us, it says, all right, well, what is our current rate? Our current target rate is 350 by 375 basis points. And on the March 18th meeting, which is the next Fed meeting, there's a 92% probability that our rate stays at the same number. But if I move out to April, that number drops to 73% probability. If you move out to June, that number now drops down to a 49% probability of a 25 basis point cut. Now, I will say this. I looked at this about maybe a week and a half ago. And when I looked at this about a week and a half ago, this 49.5% was 70-something%, right?
Right.
And so that right there is enough to scare the market into saying, oh, no more free money, or they're going to minimize our free money. And if we go out, all the way to, say, December, and you go much further out in time, remember, the further out in time we go, the more we're going to get a spread of opinions. But if you go all the way out to December, it's at roughly 52% probability that we'll be between around 300 basis points, right? Between 275 and 325. So the market is right now pricing in 0.5% rate cut, right? 50 basis points would be 0.5% rate cut between now and the end of the year. That's currently what's being priced in. The stronger economic news we have, which seems backwards, the less likely we're going to get that rate cut. And you combine that with the current environment of the slowing momentum. I'm not here to say that the bull market is over by any stretch of the imagination, because the charts have certainly not told us that. But there's no doubt that we have slowed that momentum and gone sideways.
Yeah, and I'm going to share a chart here, Chuck, that I've been watching now, and I don't know how closely you watch it, but I'm going to share a chart and something that's been on my radar for a few weeks now. is this idea of sector rotation.
Yeah, that's a good one to talk about.
I think it's really important to point out a couple things. You guys should be able to see my chart here, but essentially what I have here is 12 charts. The first 9 from top down are sectors. The bottom are really more industry groups, I guess, comm services, real estate, and transportation. And anytime we start to see financial, and by the way, I have these listed in my charts as far as like the rotation model is concerned. I have these top 3 set as growth sectors, the middle 3 as transition sectors, and the the third row down as defensive sectors. And these are just industry groups down here. So I don't consider those as much. But when you start to see financials falling and underperforming, and discretionary and tech, which has been underperforming for a little while, and then you also start to see a bunch of money over the past couple of weeks flowing into industrials, materials, and energy. And now, finally, this is actually what I was kind of looking for the sector rotation
Consumer staples.
question to be answered is all these defensive sectors, which is basically now we're seeing staples, which has been in favor for the past few weeks. Healthcare has yet to do anything, but look at this move in utilities. I was like, well, we got utilities and healthcare, which aren't really doing much. So I'm not fully ready to commit to a sector rotation idea.
Well,
but the
I wanna
fact
throw
that
this
we
on
had
there about
utilities
healthcare.
spike in the last 2 to 3 days, like that's actually starting to be a little bit more convincing.
Let me throw this in there about healthcare. If healthcare didn't include United Healthcare, it would look completely different.
That's probably very true.
Right? You got to remember that United Healthcare is dragging that whole XLV down significantly. United Healthcare is absolutely taking it on the chin. And my thought is that United Healthcare is the single largest piece of XLV. I don't know that for 100% certainty, but I'll bet dollars to donuts that it is.
Yeah, I don't either, but that's a good point. But I'm seeing this I'm seeing this sector rotation model starting to actually perform exactly as it should before we enter into more of a recessionary model. Um, and that's a little, unsettling for folks who are a bunch of long delta in their portfolio. Um, especially in financials, discretionary, or technology stocks. So we do have a little bit of concern there. And this particular watch list over here that I have, which is just the entire healthcare sector, doesn't display how much UNH.
So I'm looking at it right now. Here's
Yeah.
what's interesting. Currently, UNH is
fifth.
Fifth,
it's fifth. It only represents
4.39.
about a little less than
Yeah.
5%.
Who's the largest?
Lilly.
Who are the?
Eli Lilly, Johnson
And
and
then
Johnson.
Yeah,
And then
Eli
AbbVie.
Lilly. But look, I mean, even that's pretty stable. Johnson and Johnson's up there too.
Lilly and Johnson together are 20.
About
Yeah, but
25%.
J&J is on a skyrocket. I mean, that's kind of the point, right?
Mm-hmm.
That thing's on a skyrocket. I mean,
So we are seeing a fair amount of healthcare go up. Oops, I guess I got to erase my circle that I drew.
yeah, I mean, there's plenty that's stable, plenty that have gone down. But if Johnson and Johnson, which is one of the bigger ones, that thing is straight up. That looks like AT&T. I mean, look at that thing. You know what I mean? J&J looks really strong. So if J&J is competing against UNH, then I could see that UNH has got some probably legal troubles, I think, right? But
UNH has a lot of troubles. Humana,
They got a lot
all
of
the insurance
troubles.
companies, and there. I mean, there's talk about the unwinding of a lot of these insurance conglomerates, where you've got the what are they called, the prescription drug management whatever middlemen combined
Yeah.
with the United Healthcare owns Optum, and that Optum and United Healthcare marriage, CVS and Aetna are together, and like that's just all that stuff there's a huge problem right now I think that the market's pricing in that they're going to split those up. I don't know that for sure, but it's very rare that you hear things on both sides of an aisle that people are talking about.
Yeah,
Yeah, it's
just
interesting
so
you
when
say
it
all
comes
that. I mean,
to
Merck is like near some highs. Amgen's near some highs. Yeah, so it might just be. I mean, Bristol Myers is near some highs. So, yeah, it might just be UNH holding that whole thing down, being the fifth largest stock. But I mean, it feels like we're in an overall broad market shift from growth to defensive, which should be concerning, and it should reflect in your position size and portfolio management from a long delta position to adding some short delta in some of those weak sectors, in my
Oh man,
opinion.
what do you got, man?
can you hear me?
Yeah.
Yeah,
Yeah,
when
man. Loud.
it comes to United Healthcare and those insurance companies, one other reason they are going down is the fact that Medicare
Mm.
payment has dropped dramatically and they are in big trouble. And I said
Yeah.
already,
Sure.
my wife works for Optum and they are in a huge crisis right now. So and
Humana is another one that's getting
yeah,
hammered
yeah.
by that OMID, isn't
Optum
it?
is the biggest one in the US and they are in a big
Yeah,
trouble.
so
Yeah.
fundamentally they're in trouble. They're not doing super well, but that's I think that right there is what's holding back healthcare from actually starting its move up. So if you think back, Corey, to that sector rotation, what I think we're seeing right now, like you just said, we're already seeing the growth sectors starting to go down. The transition sectors had been leading us to the upside, but are they starting to slow momentum yet? It doesn't look like they're quite slowing momentum yet. If you pulled that chart of yours back up, you will be able to see that the tech, consumer discretionary, tech, and financials are all on their way down. You though have industrials, basic materials, and basic materials, and
Energy.
energy are on their way up. And usually, when you look at a sector rotation model, when energy is your top performing sector, that oftentimes signals a market peak, right? So if you just Google the sector rotation model, and you can find it almost anywhere, um, here's a
Yes.
picture of the sector rotation model. When you start to see basic materials and energy at the top, and consumer staples, which is XLP, right? That signals typically a bit of a market top. Now, notice though what we talked about earlier. At the same time that the market is peaking and rolling over, the economy is still getting better, which goes back to what we're saying about as the economy starts to feel like it's getting better, interest rates are less likely to be cut, which then is what perpetuates the market's move down. And the economy always lags the stock market, right? The economy is always going to lag the stock market. So when we see that the economy looks like it's getting better through unemployment claims and things like that, um, the market has typically already had its move down by the time the economy starts to go down. By the time the economy has started to go down, we're usually already officially in a bit of a bear market. And at that point, people have gone full defensive, and healthcare and utilities are the leaders.
Yeah. Problem
So
with I have with committing to that just yet is none of the indexes have broken their lows.
No,
So
they
this
not
this
yet.
still feels like a sideways to buy the dip market, but cautiously buy the dip.
Yeah, and that's kind of where I am. I used my 8 and 20 moving average model, and it kicked me out, and then it brought me right back in. But I'm okay with that at the moment. And I like that 8 and 20 moving average model, as it says. And today it's coming down right now, kissing it right now. But look at those weekly charts. If you could just zoom in on the weekly, Corey. Look at 3 straight weeks, and really 4 out of the last 5 weeks of those upper wicks. Man, I say that if I've said it once, I've said it a million times.
A lot of
Wicks tell
rejection.
a story.
Mhm.
Wicks tell a story. And right now, the story that the wick is telling me is that there is a significant amount of rejection at 700 in the SPY, 7,000 in the S&P 500. We broke, what was it, 50,000 in the Dow.
Yeah.
Um, that psychological number was broken, and the Dow's continuing to march up because it doesn't have the same technology exposure that the Nasdaq and the S&P do.
So,
Yeah,
Charles, the way you are describing this is that the way that the market is not going up is because of what's happening in the industry and the different segments, right? Uh, I always have had these questions that when you look at the market, the whole market at high level, we have people who look at stocks and segments like what you just mentioned and trade. There are people who just look at the chart and just trade. There are people who look at the fundamental analysis and trade. And, we have people who just trade futures, Nasdaq
Yep.
and S&P 500. That affects, SPX and, Nasdaq. We also have people who trade zero DT SPX options on a daily basis that affects SPX. So, I mean, I'm confused who is moving what in the market. I was in a group, and I mentioned this to Corey and the team the other day, that we were in a huge position on Christmas Eve, and it's all over in the news, and we created such a huge gamma exposure that we changed the direction of market, and people in that group lost around $50 million because of the gamma exposure they created in SPX, and the market moved that so much that day, which is very unusual. So I mean, who is moving what, or is it a combination of everything altogether?
I think when you're talking intraday market movement, I think what you're talking about is all important, right? The zero DTE options traders are having an effect on the options market, right? Corey and I notice that all the time because our spreads, if anybody who's been trading options for a long time know that option spreads have started to suck compared to what they were for the last 20 years. Option spreads that used to be you could count on an XLY or an XLK or whatever being a nickel spread. Now sometimes they're $1. Like the spreads have gotten way wide, and that's I think, and from every research I've done, that's specifically because of hedging the zero DTE options traders. Those
Yeah.
zero DTE options are causing that width in the spread. So I think on an intraday basis, I do think you're right, Omid. I think a lot of those zero DTE options traders are impacting the amount of gamma exposure, like you talked about, that happen to exist out there. It is a lot of the futures traders. I'm also really surprised, and I was talking about this in one of our trading rooms last week, about that we haven't come out with nano futures yet, right? I'm really
that's
like we've got,
coming. That's
yeah,
coming.
we're gonna have nano S&Ps. I mean, I don't know when they're gonna release a nano S&P, but it has to happen soon, right? You have a nano, then have a pico S&P, right? I mean, it's just they'll eventually get
Pico.
there. Yeah, pico S&P.
We have
Those are
XS,
like,
which is
yeah,
1/10
if they
SPX.
keep the commission small, that's fine. But they tried that shit with mini options, and that didn't work because they
Oh,
still charge the same commissions.
those 10 share contracts, those were the worst. That was a stupid idea.
Yeah. Oh man, you turned your camera off, but you sound like you have something to say. Sorry, I didn't mean to
No,
interrupt with
no, no.
that.
I mean, so I signed up to a company called Spot Gamma, which is very similar to what you have started showing us, Corey, with the dealers
Yeah,
exposure.
yeah. Spot Gamma. Yeah, it's a very confusing platform.
It is
We
very
signed
Very
up for them
confusing.
too.
I,
It's very
I don't,
confusing.
yeah, I stayed in a month, but one thing I realized that some days you will see that the zero DT SPX is above 90% of the whole,
Yeah.
option interest of whole SPX. And you see all of them expire that day. And can you imagine how many billions of dollars needs to be hedged by the market makers to basically so that they stay afloat?
And that's why you're seeing the spreads widen out on every other option is just due to those zero DTE. I think the zero DTE is a great way to trade if that's your style and that's really where you want to go. But I definitely believe that zero DTE options right now are the single most manipulated market vehicle out there.
Mhm. So again, when you just mentioned manipulation, and Corey also mentioned it, what do you guys mean by manipulation? Who can manipulate a
I say
market?
manipulate. I mean somebody with a lot of money, right?
Okay.
When Corey and I are even making trades in the fund, right? We'll go in our small hedge fund and we'll put in a trade and we will all of a sudden try to be the mid, and all of a sudden our offer becomes the bid.
Yeah, we see
We
that
do
all the
that in our trading rooms, which is only, I mean, we do that in our trading, and we're talking, probably at best 50 contracts. We're all trying to do the same thing at the same time, and we'll manipulate the dang thing.
Yeah. So
It's
it
crazy.
doesn't it doesn't take a whole lot of money. Somebody with depending on the asset that they're trading, I mean, it might be a couple of $1 million is all they need in order to manipulate, especially in individual stocks options, right? I mean, you're not really doing that on Apple, and you're probably not doing that on Tesla, but you can probably do it on something like Hims, right? Or Viking Therapeutics, or some of those ones that they've got a fair amount of options, but they're not a mega behemoth company in the options market.
Yeah, and when I say manipulation, I don't actually always mean like intentional manipulation. Like when I
Correct.
think
I agree with that.
I don't like I think of intentional manipulation as news comes out, this stock is good, this stock is bad, and here's what's going on with it. And then as soon as the stock, gaps at the open, down or up, the stock immediately reverses. Like I think of like news manipulation, things like that. But I don't actually think that the SPX 0 DTE is like intentional manipulation. I think there's an enormous amount of volume on those 0 DTE options that just manipulate the overall midterm and longer term, behavior of a market, short term intraday. I think it's just it's not an intentional manipulation tactic. I think that there's so much influence. Maybe manipulation is a wrong word. There's just so much influence by 0 DTE options that it feels manipulated.
Well, it's funny, you hear the word manipulation. Is manipulation always done with malicious intent? Right? A chiropractor manipulates my spine. It doesn't mean it's a bad thing. Manipulation.
I love it, actually.
It's just moving things around. And so just because there's a manipulation of the market, it doesn't mean that it's a malicious manipulation. That could just be their business model. If you think about all trading is some way manipulating the supply and demand levels that exist in your favor. Right? I mean, that's really what trading is. And so the companies that have more money are able to do it a lot more frequently. And that's frankly why I've said this to a number of people in the last few months. I think that futures trading is great. Futures trading is awesome for good walking around money. I think it's great for walking around money. I think it's good for some, I want to make a couple of $100 extra a week. I want to have a nice little stream, but the real money is made not in day trading. I don't think it's made in day trading of individual futures or options. I think your best probabilities of long-term success come from position trading individual equities that you have a directional bias on, and trading options, and potentially not even individual equities, maybe just the index. Right? There's the old quote, why try to pick the needle in the haystack when you can just get the whole haystack? You're guaranteed to get the needle. I think long-term wealth is best gained by trading options on a slightly larger time frame where you're moving things around.
Yeah. I mean, I would agree with that, except I know a decent amount of people that make a shit ton of money day trading futures in the last hour of the day.
True.
Right. One of my closest friends for almost 30 years now, her husband is a futures trader. That's all he's ever done. That's all he's ever known. He traded stocks on the New York Stock Exchange, and he still has links to a lot of people who are left on the floor, if you want to call it that. But that's all he does is the last hour of the day, he trades his S&P futures. And I shit you not, he makes bank. But it's not the first hour of the day, it's the last hour of the day. So maybe there's a difference there, and I don't know the answer to that. He's not disclosing the strategy as much. It's probably more of an arbitrage opportunity than it is directional opportunity. But it's a game that has a limit in terms of how you can scale it. And they ran into scaling abilities during COVID when the volume was huge. and they know that they reach their scaling abilities. But I like day trading futures is not for me, simply because of the time zone that I live in. Like, there's no freaking way I want to wake up at 4:45 and get ready for 5:30 economic reports. There's not a chance I want to do that. I tried that for a couple of years and I was miserable every day. So I do agree
you're
that
super happy every day now.
I'm pretty happy most times. It depends on the day.
Yeah. No, you're right. You're right. I just from what I've
But
seen, as far as the most number of people that I've met that have gotten success
yeah,
in the financial markets, I'd say the higher percentage of people that I've met that have
agreed.
found success in the financial markets have found it through options trading. Slow and steady wins the race, and the ability to be patient and have a disciplined plan that you follow over time.
Yeah. Is it true that 4 base hits are a home run? I don't know sports.
I know. Go sports. I know that's your jam.
I mean, go sports. Is it true that 4 base hits are equal 1 home run?
If the bases are empty, yeah, we'll call it that.
I don't know. I
Well,
saw that
I will tell
recently, and
you,
I'm like, that makes a lot of sense.
If you have 1 home run and everybody else strikes out, but then you get 4 base hits and then one person hits a home run, then you're still better off. So point is that I need more people on base when I do hit the home run. So I want consistent small returns, longer term, over time.
I was in a mentor session earlier today, Chuck, and I was talking to a guy who was consistently profitable doing his base hit strategy, and he traded with a prop firm. And this particular prop firm pays out over a certain amount, and when he would get anywhere near that amount, it would result in him trying to hit that home run to get over that amount so that he could get paid by the firm. And every single time he would go for that home run, he would screw it up and it would knock him back down, and he would lose his his prop firm status, and they'd send him back into the combine. And I think that the emotional response there is, and it's very psychological, to Liz's point. And it's like, anytime we try to swing for those fences, it gets really difficult to, I mean, obviously we can't control the outcome, but it gets really difficult to control the emotions around that. And I would venture to say that, because I'm coaching this guy and mentoring this guy through, to get back funded again. And I'm like, stop with the home runs. You proved it during your base hits all day long. Just base hit it. If you have to wait a week or two to get your base hit and get your payout, wait a week or two. Stop trying to go for the home run, because every time he tries to go for the home run, he screws it up and it falls back, and now he's defunded again. I agree with that not only base hit strategy, but I also agree with the passive strategy of just let it play out. There's so much market
Is he trading
volatility.
futures?
No, just stocks.
Oh, stocks.
Just stocks.
Well, and I think that one of the hard parts for us to realize is that there's a war within, right? The war within, which Corey, you and I have talked about, is that the real enemy isn't the other side of your trade. The real enemy isn't your computer. The real enemy is 6 inches from the screen, and it's the gray matter between your ears. And that's the hardest thing to control. And I don't care how long you've been trading, you have to understand how your internal battle is going to play over your investment lifetime. Because if you succumb to the outside influences and you let too much of the hormones that come into your brain, like cortisol, which is your stress hormone, or you let too much of your dopamine come in because you get too excited,
100% a dopamine fix,
then you fail, right? It's how do I learn to emotionally remove myself from the results and fall in love with the process?
As I said, we need a Dr. Woody session.
Yeah, he's a snooze fest.
Yeah, I know. So, but
actually, I do have a guy. I have a guy, and I want to try to. And you guys have met him. Those of you who are Traders Army members, and I know not everybody on the call right now is a Traders Army member, but you guys met a trader by the name of Jeremy Holland, who I respect so much, not only from his own trading performance, but he has probably dove into the trading psychology world more than anyone I've ever met. And I want to try to introduce him to you guys more frequently as Traders Army members, because he is a world of knowledge when it comes to trading psychology. And I would venture to say that 80 to 90% of trading and the performance outcome has to do with psychology more than this level, that level, stop loss, target, whatever. I don't care what your plan says. It's psychology is a big one. And, Chuck and I want to, as we're launching the new version of Traders Army, in terms of delivery method and, website experience and education experience, coming probably second quarter, I think is what we're targeting, Chuck, of the year. I want to start to incorporate more of that, because it's such an important part that, we appreciate it, but we don't have a lot of content around it. But I think it would be really important to start incorporating it.
Yeah. Well, we don't have a lot of content around it because, frankly, we're not psychologists.
Right. Have
No.
you ever listened to the Mark Douglas audiobook or read the Mark Douglas book, The
I
Trading
have
in the
it.
Zone? I
It's right
mean,
here. I have it right
okay.
here.
Okay. I mean, that's worth either reading or listening to, depending on your learning style.
Yeah.
But back to the point you were just saying about Corey, the person you were mentoring that was just sort of going for broke in the last 10 meters of the race, that was failing.
Right.
Why is he or she changing their strategy? I mean, it sounds like they're
Emotions.
going.
So I had a mentor call with him today, actually, and before I even got into the trading aspect of our conversation, he expressed willingly that he was an impulsive person
Okay.
in general. And I'm
Well,
like,
that's
okay,
the
well,
problem.
that makes sense. Right? That makes sense, because he sent me his trading plan, his revised trading plan, because he was with a prop firm and he got I don't know if the word demoted is the right word, but he got basically his funding
That's a good
taken
word.
away. And he's like, okay, you're sent back and you got to work on your trade plan. And he got sent to me to help fix it. And so I took his trading plan. It was revised. And I used a lot of AI for this, because it's just genius to use AI for things like this. And I said, as a world-class trading mentor and coach, and I kind of went into I prompted ChatGPT to like really analyze this from a world class trading mentor, and it said this is all over the place. Basically, it said this is subjective trading. There's no specific risk management technique in that's objective. Everything is subjective, and it was just all emotional trading. He was so desperate, and it was trading from a standpoint of desperation on the last mile, on the last 50 yards to just like win. And he'd push himself and he'd pull his Achilles heel. Like it was like every single time as he tried to like push it, he would pull a muscle and then he would fail. And that's an emotional response to the I don't even know if it's the desire, maybe the need to feel validated. But his trading is very emotional and very psychological. And his position sizing was all off. I mean, there's all kinds of things that are wrong with it. But ultimately,
So just my thinking while you're talking is that if he is very emotional and doesn't follow rules, he could have the best trading plan in the world. It sounds like he's not going to stick to it.
a
So,
million percent. And by the way, his trading plan is 18 pages long. So who's
oh
going to stick to
God.
an 18-page trading plan? No one. Right? So I'm like, all right, this needs to be 2 to 3 pages, and you need to have a 1-page summary of steps that you like. I'm coaching him through all this, right? So like, you have a 3-page trading plan tops, and then inside that with all the details, and then you have a 1-page checklist to make sure that you hit all those points objectively before you make a trade. I mean, this particular person had 3 different methods of stop loss placement, 3 different methods of position sizing, and I'm like, you're all over the place.
Well, and in my mind, that just goes back to you've got to follow a process.
Yeah,
You got to have
process is boring, but it pays the bills.
100%, no doubt.
And process is important. It keeps us it keeps most planes from falling out of the sky. I mean, it's not that difficult to understand how much a pilot looks at their clipboard checklist and walks around the plane and does all their due diligence. And if one thing doesn't check off, they don't fly. If everything checks off, they fly. And there's not like there's 100% guarantee that flight's going to work out, but they've done all their due diligence. And, you know, I see so many people just flying by the seat of their pants and saying, I have a plan. But then when I look at the plan and I throw their trades and their trade statement into a model that says, are they following in their plan? And it spits out, no, they're not at all. It's like, well, okay, well, then there's the discrepancy. It's too difficult a process, a plan to stick to. You're not following it, and therefore the result is negative. And so I think that simplifying that is probably the most important thing for this person, but I think that's the truth for every person.
Hey, one thing I want to address, and we had a great question, and I think it's good to talk about it, is prop firms. So Leo had a great question. He says best prop firm. So let's talk about a prop firm for a minute, because I don't think everybody's familiar with prop firms. And a prop firm is essentially the opportunity to use somebody else's money to trade with. And most prop firms are futures and Forex. But there are a few prop firms that are options and stock prop firms. A prop firm, essentially, you put up a small amount of capital, and then they allow you to trade with a much larger amount of capital. And some of them have monthly fees where you've got to prove that you know how to trade, and you pay the monthly fee while you're proving that you know how to trade, and then you gain access to capital. Some prop firms, you put up a call it a risk deposit of your amount of money, and then you have more. And so the question there says best prop firm. Now I want to state, I don't have skin in the game when it comes to prop firms. But when it comes to options prop firms, Maverick is the one that I would definitely talk about the most. Maverick Trading is I think a great options prop firm, in that you put up a small amount of risk capital. You as your deposit, you get access to much more capital to work with. We're actually we've done a lot of stuff with Maverick in the past, and the guy who started Maverick was one of my first instructors. And Corey, you do a lot of stuff helping those guys on some things. So from options prop firm, Maverick Trading, I think, is the best way to go. And then when it comes to futures, Top Step was always the best one. But I've heard a lot lately about Take Profit Trader. I don't know much about them, but I've heard a lot of good things about Take Profit, as far as a good futures prop firm.
Also, Blue Sky is a good one. Blue Sky is another good one with futures. Yeah, Top Step, Blue Sky, and Take Profit. These are top 3 and US based.
How do you feel about Apex, Omid?
Yeah, Apex has very difficult rules, with the, dynamic drawdown, daily drawdown. Okay. You can blow your account very fast. They provide very, very cheap accounts, but, you're going to blow them. You need to budget to blow maybe 10 accounts to be able to pass one. Got
it. Yeah, that's good. Yeah, so Maverick does options and Forex. They have a currency division as well. And I've actually heard of a few people. One of my mentors, actually, that we have, had an Apex account, and he tried to take a draw of 30 grand off of one of his, or I don't know how many accounts he had, but off of Apex. And they let it happen, but they canceled all of his accounts because that was too big of a deposit. That was too big of a redemption. And I think it largely depends on, I think Apex specifically, what I'm learning now is largely dependent upon traders not taking too big of a redemption, because the money that they redeem and the money that they pay out on is paper money, um, which I think comes from subscriptions to try to get like and maintain your prop status. So that's a little interesting one for me. Apex, I've never heard of that one, but
And so, Corey, I have 16 funded accounts with Apex, and I'm trading
okay,
futures with them. So yeah, Apex gives you SIM accounts to trade. So
it's all
I mean,
sim.
their business model is all about charging you subscription fee with the evals. And, as soon
Right,
as you pass the eval, you will be, an overhead for them. Because if they want to pay you, if they want to do a payout, it's going to be from a SIM account. It's not a real
right.
account.
Yeah, and I
That
think
is
that's why he
why.
got flagged. Yeah, I
Yeah.
think that's why he got flagged. He tried to have like a $30,000 redemption, and they were like, "Oh, you can't do that. Like, we can't afford that kind of thing." And so we're canceling your accounts. And I was like, "Isn't that weird? Like, the more money you make for them, doesn't that mean that you should, be able to redeem, any amount you want as long as it's like part of the agreement?" And he was like, "Yeah, it's because it's not actual live money, it's sim accounts, and they're paying you out of subscriptions, not live account trading,"
Yeah,
which I thought
and
was
that
really interesting.
and that I don't love. I want to be traded, and that's one of the things I do like about Maverick is you put up a risk deposit, and I'm pretty sure that take profit is done that way.
Yeah, well, with Rob, and I know Rob really intimately. I've known Rob Reinhold, who runs Maverick Trading. Um, when someone puts up say a $5,000 performance bond, and they have a 25 or 30 or $50,000 account to trade with from a leverage standpoint, that leverage comes from it's his money. It's not subscription based. It's actually his money. So an interesting conversation with him was, and he's like, yeah, sometimes I'll go in and I'll look at some of these traders, and I will, going into the weekend, if I feel like some traders are taking a little bit more risk than I'm comfortable with because that's my money, I will hedge against my own traders. And I'm like, well, that's smart. Obviously, you should. Um, and so, to me, like when Maverick pays out their performance split to the trader versus the Maverick funded account, um, it's real, and they don't pull your funding and they don't pull your prop status unless you just suck as the trader and you draw down more than their rules would draw down, or if you need to add more to your account from a performance bond standpoint. But when it's somebody like that who's putting up their own capital, a firm, whether it's a single person, and I know it's a single person, but when it's a firm putting up their own account, to leverage other traders, that to me means more than just I'm paying out on subscriptions. It seems like Apex, it sounds like Apex is after subscriptions, not really funding traders, which has changed my tone on somebody like Apex, big time. And I don't know
Yeah.
how Top Step, operates. Obviously, I don't know anybody at Top Step, um, but knowing Rob personally and knowing he's funding those accounts himself, and leveraging his own traders 5x or more, that kind of means a lot. And I can see why he would be so specific on having an entire risk management team monitoring all accounts. This has been fun. Are we at the top? No, we're not at the top of the hour. We got 10 more minutes.
Yeah.
Come on.
Trade
So,
fee. Leo says trade fee. I'm not familiar with that one at all.
Yeah, no, Leo, it's good. I haven't heard of that one.
Yeah,
I,
Tradify, that's another good one.
Corey,
Yes, ma'am.
yes, going back full circle to how we started off the discussion tonight, you were talking about sector rotation. And I know I've been over this with Chuck before, but have you ever used FinViz? Because you can pull up sector rotation graphs that automatically cover a 1 week well, actually a day, which I don't take any notice of, a week maybe not, but a 1 month, 3 month. 6-month look back period, and then that way you can see how the sector rotation model is evolving. So rather than your think or swim charts, which are obviously just real time only. Right, there you
Right.
go.
Yep.
So
Yep. I actually Maverick, in talking with Rob a lot, the Maverick uses this particular chart to determine what sectors are outperforming and underperforming, and I think it's
right,
great.
right.
Yeah. And
So I
yep.
don't really pay any attention at all to a 1 day, a week, maybe, but not really. It's more probably the 1 month I'm looking at.
Yeah.
And you can start to see how things are churning through here.
Yep, 1,000,000%. And I used to use this, and we just signed up for like I just within the last month signed up for FinViz Elite. So like, there's a lot of features that exist for people who pay, and so this is not one of them. This is a free
Right,
version.
I
You
just
can get
use the
this on the
freebie.
free.
Yep.
Um, and I like it, and I used to use it a lot because it does give you, okay, on a daily basis, which sectors are receiving the most money inflowing and which sectors are receiving the most money outflowing. And I like it. I don't hate it at all, actually. I just find that I like to see in my own, kind of 3 month look back or 6 month or 1 month, how the charts are switching. And I feel like in my mind, it's a little easier to see how charts are switching in terms of like relative weakness versus relative strength. You know what I mean? Like, I can see a look back over the last 3 months and see that,
Mm-hmm.
financials were outperforming and now they're underperforming. And I can see that switch happening. And what I'm looking for, and specifically what I've been looking for in utilities, is we have this big gap between the S&P. If I look at the white space in between the S&P and the utility sector, I'm like, I'm just kind of watching for utilities. Are they going to pick up, or is the S&P going to fall apart? And I'm actually starting to see that rotation into utilities and out of S&P, which is why I use my custom think or swim charts to actually view that. But to your point, like, if you can monitor that and take note of that somehow, you can see that in here as well, right?
Mm-hmm.
I just don't know that I've mastered looking at this particular view and saying I can see where the rotation is happening. Do you know what I mean? But if
Yeah, I think it's just a question of viewing it, maybe weekly or
yeah,
monthly perhaps, and
yeah,
obviously looking at the charts themselves. But the other thing that I really like about FinViz, well, several things. Uh, you're on the graph graph tab. If you go one tab to the left to the maps, no, up at the top, go up.
oh,
Yep, there.
charts.
No, maps.
Ah, shoot, I screwed that up, didn't I?
Scroll back. Maps. Yep.
Oh, I love
And
the heat
then,
map. Yeah, for sure.
well, but better than that, to my eyes, go all the way to the left and down to where it says bubbles. What? No, up, bubbles.
Oh,
And then
interesting. I've not
that
looked
will
at this chart
show.
ever.
Okay, so this shows you every single day, and this is something I will look at probably an hour or so after the market open. It'll show you
Where they are which ones are up the
right,
most and down the most, so you
right.
can see gappers
So
for sure.
exactly. So I sometimes use this for the purpose of perhaps a bull put spread or a bear call spread, like things that are just ridiculously overextended for whatever reason.
Hmm.
Obviously a name that I recognize where there's sufficient liquidity and obviously sufficient option. The spreads are tight. But yeah, I do find this pretty helpful too. I mean, after hours it's less useful, but
Right.
during market hours, that's kind of worth looking at.
Oh, that's neat. I've never looked at this view
Yeah,
before.
you can see some complete outliers that may be just utterly ridiculous. And that's how today in your session I mentioned what was it, CBRE?
Yeah.
It was just falling off a cliff.
Yeah.
That's how I picked up that, not because it came up on any screener, but just it was like, whoa, this is an outlier.
Yeah, no, that's cool. I've never looked at this view. The way that I've used FinViz has been for, obviously I have my own scanners and screeners, but like when I'm coming in here and I'm looking for just some basic, give me stocks over $10 that trade over 2 million shares that are optionable. I can go into the individual sector. And let's say I'm looking to just be long industrials. Probably my favorite thing about FinViz is that I can look at charts and I can eyeball and say what charts here are displaying relative strength or relative weakness. And I've gotten some pretty great ideas in my mind from just looking at this chart view, like really digging down into what sectors do I want to be, relatively, long. And if I want to be long utilities or if I want to be short financials, and I can come over here to overview and I can sort by, biggest loser today was AGQ. So I can sort, and then all of a sudden I can start to see which stocks are poised to break down, which stocks are poised to break higher if I'm looking at relative strength. So I've really started to appreciate these FinViz charts really quick because I can actually start to see, Upstart. Upstart just kind of broke down. Actually, it broke down yesterday, so we probably missed the trade. But Upstart starting to break down. I would then, move over to my Thinkorswim charts to really start to see if there's anything on Upstart that makes sense. And I found so many good trades from just being sector specific, relative strength, relative weakness, and just kind of eyeballing really quickly and going, okay, I don't know if any of these, I know they're optionable, but I don't know if they're liquid options. So I
Right,
usually
and
do
that's
this.
the trouble. You've got to then dig into your own platform to
And
figure
that's
that
where
out.
I run it, and that's where I run into trouble a lot. Is I'll find a really good stock trade that I really like, and then I go look at the options. I'm like, yeah, that's hot garbage.
Yeah. But like some of the trades that I picked up were like AT&T. I'm like, oh, this thing looks relatively strong. And I looked at it 2 days ago, 3 days ago, and this thing broke out to supply in like 2 days. Probably one of the biggest regrets of my life in trading is not shorting. And I called this son of a bitch. I said, this thing has got a head and shoulders pattern. This thing's about to break down. I just called it to here. I'm like, this thing has a pretty good move coming. It looks like a pretty bearish move. I got this from my FinViz scan. And this thing is at 56. When I called it, it was at 70. And I'm like, you asshole. Like,
Mr. Shoulda, Mr. Coulda, Mr. Woulda, the three richest men that ever lived.
I'm telling you. So, like, the more I dig deeper into relative strength and weakness in the market, and then, like, this FinViz view is probably something I wish Thinkorswim had, but it doesn't, which is just an overall view of all the top and, bottom performing stocks. And it just gives me a quick oversight as to, do I want to look at anything on this list? Probably not. Go to page 2. And there's a lot of pages. And I'll usually sort with I'll usually look at the first 3 to 4 pages and then I'm like, I'm probably good with that. But like, that's probably my favorite thing about FinViz is that, and it's given me a different little, a little bit of a different perspective as far as, how to look for stocks, which has been really nice to have.
Yeah, and Chuck, I think I've told you this numerous times, but one of the best scanners I've found is that sort of what I call the best in breed scanner that you've gone over a few times on a Tuesday morning classes, which is stocks in an uptrend with it's a combination of fundamentals
and
and
an uptrend with an ROE that's north of 20. So
right,
where are you finding that? Where are you finding that? Is that bar chart or IBD or what?
No,
I can do it at FinViz.
You make it.
Oh, really?
Yeah.
And I run that frequently, and some of the best trades I've had are out of that, where you're clearly trading with the trend.
Trading with the trend, strong fundamental stocks that you hold on to for a while. That's the way. I've
had some phenomenal runners with that.
All right, so I'm going to ask you real quick, Chuck. Can you walk me through what you're talking about? Liz, Chuck, I don't care who chimes in, but like all I have is over $10, over 2 million average volume, We can say any sector, and I want it optionable. What else do you do?
You need stacked moving averages.
Yep.
So 20 above the 50, above the 200.
Above the 20, above the 50, and above the 200.
Yeah, but it's not just price above all three of those. You need the 20 above the 50, above the 200. So you need,
Oh,
so you got to be a bit careful about how you
oh, I
program
see.
that.
20 above the 50.
The price above the 20.
So is that the right one? SMA 20 above the 50?
Yeah,
or
I actually do. When I want to build this, I build it in Thinkorswim or even TradingView, because I can do price above the 50, price above the 20, price above the 200, and then I can also do the price of the 20 greater than the price of the 50, greater than the price of the 200.
All right, well, this sounds like the next Stocks on the Rocks conversation.
Right. It's a great idea.
Okay. All right. I mean, there is a way you can do it in FinViz. It just takes a bit of.
FinViz.
Hang on, I've got my. Oh goodness, here I've got it here.
It's a great screener, though.
Oh, it is. It's phenomenal.
The one thing I wish that the FinViz screener would give me the option to do is say not just optionable but liquid.
Yes.
Yeah, I don't think you're going to find that. Well,
But I don't have
that in my bar chart screener either. So I use bar chart screening tool. I like bar chart screener as well, and I think I could do that in bar chart. The screener.
You can do it in Thinkorswim, but you can't do it in FinViz. I don't think it just says optionable or not.
Yeah, same thing with TradingView.
And I would like to do, which I can do in Thinkorswim, is don't show me stocks that have earnings in the next 2 weeks.
Right.
Or 3 weeks or whatever,
Yeah, that's one of the reasons that I've really liked bar chart. I've gotten I'm hashtag not an ad, but I've gotten I got a subscription to barchart.com, and I really like the screeners at bar chart.
All right. Everybody's got it. So Corey, what you need is price above the 20.
Price above the 20.
Above the 20. And then you need the 50 below the 20.
Oh, yeah, that would do it.
Okay.
And then you need the 200 below the 50.
The price below the 50?
No. The 50 below the 20. There's so many choices.
SMA
right here.
50. Yeah. No, not cross.
Oh, shit.
SMA 50 below SMA 20.
There it is.
Yes. And then you need the 200 SMA below the 50 SMA.
That'll make your moving averages stacked.
Yeah, your stacked moving averages. And
They're
then
stacked.
For your, oh goodness.
Fundamentals.
Yeah. On your fundamentals, you want your EPS growth over, I can't even see what this is. Over, well, I just use the freebie version. So I think if you're on a paid version, you can be more specific, but I think I've just got it over. I don't know what I've got it at.
I just have a positive EPS, and then
EPS. I've got EPS quarter over quarter of something. It just says positive.
Positive, yep. And then I do ROE greater than 20. Return on equity greater than 20.
Right. And and by the way, Corey, this is how I found Eric. I run this like almost every day. It takes like a nanosecond to run it. Just scroll through it.
Is that right, Chuck? A return over equity over 20? Okay. Yep. All right.
And then price, I do price over 15.
Yeah, I think I've got mine at 10, but good enough.
I'm calling this Stocks on the Rocks scanner.
Well, okay, I call it the best in breed, but
best in breed sounds awesome. That sounds sexy.
Well, okay.
All right.
Go click on all, Corey. It's just so much easier if it's on all.
Yeah, look at all
Right.
these choices.
Then you can see everything.
No, I mean, if the market's going to absolutely
now I do average true range over 1.
Why?
Just so that I have enough movement to make money on. If I'm looking to,
But what if you're a credit spread trader? Does that matter?
Maybe not, but
it's what I do.
That's my hesitance, and I only ask it. That's my hesitance because with a market environment that we're in right now, I don't feel strongly directional about anything. So I don't, like, my mind, I don't care about ATR or beta if I'm a credit spread trader. And you can challenge me on that, but that's kind of my thoughts. Like, I don't know why an ATR matters.
Here's my fear. I mean, you can look up a bunch of things, but with a low ATR, you may not get enough credit in order to justify the risk you'd have to take.
Possible.
That's my thought. So like something with a terribly low ATR, and I can't think of one off the top of my head, but like an energy stock with just a really low ATR that doesn't really move, your credit spread you'd have to sell would be so close to current price, you'd be too nervous about selling.
Right, possibly. But do I want to filter that is the question.
I would, because that's just one more thing for me to look at that I know it's a trade I'm probably not going to take.
Yeah. This is a really interesting Stocks on the Rocks because we're like really strategizing right now. I love it. You should join us more often, Chuck.
But
I will. I'm back in.
Yeah,
but I love you all, but it's time for me to go put my daughter to bed.
I'm telling you, it's 5 after 6. I got to cook dinner in a minute.
5 after 8. You forget the time.
But
it's 5 after
Liz.
9. Actually, it's 7 after 9. But I mean, Corey, just back on the best in breed. I mean, I've just run it again right now. I've got 49 stocks. Typically, I get anywhere from 30 to, let's say, 50. So it's not a whole lot to look through, but these are ones that you know are trending. You've got the fundamental guys that are interested. You've got the technical guys that are interested. I mean, you study it for yourself. You may
Carnival,
like or dislike it.
Carnival looks like it's ready for a breakout.
I'm thinking breakout on Carnival, and I just kind of looked at that really quickly. Like, I'd be a long breakout on Carnival.
Funnily enough, that's a trade I'm in.
Nice.
I mean, honestly, DYOR, do your own research, but I think this is
I've been listening to a guy lately who says, if you're taking the ultimate risk, you're the one who has to do the ultimate frisk.
What the hell?
I don't know.
All right, time to wrap it up.
All right, that's all I got, everybody. Hey, thanks for joining us tonight. I hope you learned something. If you're not a Traders Army member, come be a Traders Army member. It's fun. We like you. Come hang out. So,
all right,
listen,
thanks, guys.
Listen, I'm going to put it up here. Trader. Is that a trader? 60.
What the heck does that say?
Just says
trapped.
Trapper keeper.
60.
Yeah.
All right, thanks, guys.
Check us out. Check us out. It's going to be fun. All right, Chuck,
night,
Liz, everybody, thank you guys. Appreciate y'all. Be good. Till next time.